XM.com chief executive, live in our City CBD studio. Pete, welcome to you. Compliance and I suppose an update from OPEC members released. What's been found on that score?
Well, good afternoon, Carsten. One of the, I think, coming fresh to my mind is certainly that compliance number. They're saying it's around about a 93% over that period of January, Carsten. So that really has, I think, bettered down the whole process. Saudi Arabia has cut more than expected. We're seeing maintenance coming online now, which is traditional in this, January, February, March period, that some of those large Mid-East production facilities are, trimming back, which is natural, and of course from that seasonality. But more importantly, as the maintenance comes in, you're going to see further cuts, which in turn I think is going to, easily hit that 100% plus number for compliance.
That's all well and good, but at the same time, Trump has been putting, the word out that the shale business there will go from strength to strength. Now, It just seems as if increasingly OPEC can do whatever it wants, but shale's not going to go away. No,
exactly right. What's interesting also, we've had that rig count up, and I think it's, well over that 500 number now. Certainly well off its highs, but when we're looking at the rigs, the average production was around about 650, 660 barrels per day from a rig. Now they've pushed that up to over 1,000. So production has increased dramatically due to technologies and innovation over the last, 12 to 18 months. So as more come online, they produce more, and that's going to be the handbrake, naturally, as we've discussed many times, as far as OPEC moving forward after July 1.
Some data from the Intercontinental Exchange, a.k.a. the ICE, 10,000 contracts on Brent, net longs taken out of play. Now, again, if you want a lead indicator on scepticism about US production and the influence that has on pricing, surely you follow the net longs, do you not?
Well, you do. I mean, the money managers and hedge funds have been all over it. They've been long gold, long crude, long for really for the last, 12 to 14 months. They saw that bounce, they saw those lows, and it's been one-way traffic since, those $26, $27 numbers that we were getting this time last year. So put your mind to that one, up 100%. Then we see, of course, that push into the base metals and that growing consumption. Gasoline consumption is down in the States, but that's not unusual. We're not in the driving season. Car sales are well up, and that's quite an interesting point because they're all returning to those SUVs, Carson.
What do you make of the inventory data out of the US? Those inventories seem to be quite high as well. Do you think that matters? Yeah, it does matter. I mean, they come out normally, those weekly or fortnightly numbers, and they are a little bit high. But again, it's down to that seasonality. We've got some, I think, from an inventory side of it, there's no doubt, the Bracken Ridge, the all those large Permian Basin and more production coming out of the shale is impacting that side of the market. So as more rigs come online and they're producing more, naturally your inventory numbers go up. So I think that's going to be, again, an interesting tale. We saw that washout last night, about 2%. Everyone's mind is very centred on what Trump's trying to achieve. The talk there of a $1 trillion infrastructure spend over the next decade, it's certainly going to add significant weight behind the crude numbers, and it's just a wait and see what happens. It's very, very volatile.
Hello, Peter. It's John Milroy from Lord Manette here.
Hey, John.
G'day. Just a quick one back. You mentioned that long side to this crude trade for some time now, and that seems to be holding up. I mean, the information you've talked about tonight about, these increase in rig numbers, that was hard to say, and of course the production yield as well. Yes. I mean, what's happening on the demand side that gives these longs such a positive view and the ability to hold on for, what seems like a bit longer?
Well, John, I think that they've got, it's been a seasonal or I should say cyclical process that the hedge funds have been in. They've had 4 cycles, putting your mind back to about 2014, early 14. So it was a 14, 15, 16 play. And in that period of time, they went long and short for definitive trades. Now, at the moment, they're certainly long. What's Yellen going to do over the next 24 to 36 hours? Janet and her mindset, she's got 2 presentations to make. Are we going to see some form of rate hike, take off in the March period. We're not sure. 30% are saying that they're going to see it. So all of those factors are pushing into the hedge funds' decision-making processes. It's been a one-way trade. They're making great money out of it, and I think it's just a wait and see. All of them have stacked long positions, John, and it's not unusual. When these guys play, they play big time.
So how to understand that same argument in light of what's been going on in copper, because they've missed out the unwind of about a 15% option
They got out
contract.
too early.
They did. Now, are they sort of starting to doubt the Trump infrastructure pledge? Is that part of it, or is it more back on the Fed, to your point about, you know, go and follow the money there, chase
Well, a couple of things.
Story.
First off, you've got those two large mines. You've got Grasberg in Indonesia and you've got Escondido. There's been that force majeure, so that's going to impact. We're saying that one could take 3 weeks and the other one certainly longer from Grasberg's situation in Indonesia, Carson. So they're the outliers as far as the production. I think that you're going to see a continued uptick as far as that copper number. It's still cheap at 6,000. You know, it was, I think it was around about 4,400, 4,500 this time last year. So it's up 32, 33% in that period. Not a bad rise. We're up 11% since January 1. So a lot of people have had their mind off copper, and it's certainly had a great resurgence in that short period of time, really since, you know, the November, December, since President-elect was, you know, he got the green light.
Where typically do these things go when we think of the funds and the migration from one to the next? Where would you have expected that money to have wound up, at least short term?
Well, you know what? You know, these guys play long and short, and you can see what's happening with the short side as far as cocoa, for example. And I'll throw that one in for, you know, the Valentines out there. You're looking at around about a $1.7 billion spend in America today for confectionaries and chocolate and so on. So
and they're claiming it's going to be cheaper. I mean, can you believe that? That was a misprint, wasn't it? It's not going to be cheaper at all. But since when did the price go down, Pete?
Well, Carson, it's going down on the futures side. I mean, it's been certainly hit from 3,300 to around about 1,900 a metric tonne. So that's got to go across to the Hershey's, to the consumer out there. I know what you're saying. You know, the retailers may not be dropping price, but certainly the inputs going into the product are far cheaper. So that needs to be considered, and, you know, I don't buy a lot of chocolate, so, but that's the answer to that one.
You need to find a rose seller, I think. Is there any listed rose companies?
I'm just thinking of all those broken roses that seem to be featuring as graphics on so many shows these days. Like,
that's rather
into 1,000 pieces. Yeah. It's all rather tragic.
Peter, it's John Milroy again.
Yes, John.
I won't be giving away any copper for Valentine's Day, I don't think. But
no.
What sort of things should we be watching out for in terms of you know, that move up in copper? I mean, you know, we should be watching the LME, for instance, and you know, some of those things.
Absolutely, certainly the LME, and I'm keeping a close eye as far as that iron ore price. I mean, that's been one-way traffic all the way through, and that'll take it up. What happens as far as energy? Does energy cop it in the neck and it just languishes around this mid-50s, or do we see further uptick and push it to 60? What's happening with the gas price? The seasonality, China's back in play now after the Lunar New Year. I think it'll be strong buying up to possibly Easter. I think they bought over 1 billion tonnes last year, so it's a big number, and I saw that there's about 127, 128 million tonnes in storage. So I think that there's more upside there for that copper price. John, 6,000 a metric tonnes, well off the 11s and 12,000s that, you know, weren't that long ago.
It's interesting, though, the call from 13 Bloomberg forecasters, or at least they pulled in 13 forecasters.
Yes.
Not Bloomberg's own forecasters. They went out to the market to solicitors, you know. They're calling out 55 a metric tonne in the final 3 months of this year. So that is quite a pullback.
It is a pullback, but you've only got to put your mind back a month when it was up 11%. So I think you probably edge higher from here. I wouldn't be surprised, you know, you take those mid-$63, $6,400, and you'll see that it'll probably rally over that Northern Hemisphere summer and be sold off into winter. So it's not unusual. It's a seasonality trade as well. Let's see where the hedge funds play with it, but at the moment, they're certainly, you know, stronger for longer.
Peter, John Milroy again. Just ex-cocoa. Are you looking anywhere else in the commodity space, soft or
well, you know, you keep an eye on softs and, you know, weather and certainly, you know, the Brazil situation and what's moving, you know, sugar and those sort of numbers, John. But everyone's very, very having a very close eye, I should say, as far as where energy plays.
Yeah.
You know, there are so many outliers. We're now 6 weeks into these cuts. What's going to happen as far as compliance leading into April and May? Are we going to see further cuts? Are we going to see issues moving forward? Are they going to hold to those sort of numbers? It's just a wait and see, and everyone's got their eye certainly on the target, but it may happen quicker than we thought.
It sounds like UEFA. All right,
yes.
thank you very much, people. Talk to you soon. All the very best.